If the world's so miserable, if the central banks are dealing with OECD forecasted global slowdown, global recession, why are stocks up?
Yeah, so I think there are a few reasons why. I mean, first of all, central bank liquidity is still very important. I mean, over the past decade, we've seen how, for example, QE, low interest rate, have fueled the stock market. I think dovish central banks, not just the U.S., but really you're talking about globally. And also you've got liquidity, RR cuts from China, releasing a lot of liquidity into the markets. I think that's very helpful. And also you have to think about the relative valuation of equities versus bonds. I mean, bonds, we're seeing a lot of negative yielding bonds in Europe. 1/3 of government bonds are negative, and the relative valuation of equity is simply much more attractive than bonds from an investor's perspective, especially for longer-term investors. And I think that is the reason why equities have been holding up so well.
Do you link, and I mean, it's more a Ben Ritchie question, but I'm going to go to Janet first on this. Do you link the animal spirit of the economy into revenue growth, or are they disassociated in these odd times?
Well, I don't think actually there's a lot of animal spirit in the world at the moment. I think actually the underlying demand of the global economy is not very strong at the moment. You can see that, I mean, that's really depressed by the trade tensions nowadays. You can see that, global trade is actually a proxy for how much animal spirit, the cyclical activity globally, and you have seen that has slumped a lot over the past year or so. And I think companies are generally quite cautious at this stage of the economic cycle, and that's why we don't see a lot of animal spirit for now. I think the animal spirit now perhaps is in the financial markets and the risk assets because of central bank increasing the liquidity and expectation that central banks will become even more dovish.